And today's our guest is Colson Castilla from Ember Asset Management. Welcome, Colson.
Hey, Rama, thanks for having me.
Sure, thank you very much. A little bit about Colson. Colson began his career supporting a nationwide team of multifamily loan originators for PJIM Real Estate Finance as a finance analyst. Colson then moved into the asset management and acquisition role for a Denver-based private equity real estate firm, managing a 200 million portfolio of industrial, retail, and commercial assets throughout the US. Carlson graduated with a BA in economics and business from Hampton Sydney College, Virginia. So, with that, Carlson, you want to add anything to your background?
Yeah, I've worked with big groups, I've worked with small groups, medium-sized group. I think I've kind of moved into my niche of working with that smaller to growing and medium-sized firms. And having been at some of these larger firms, I've gotten to see how institutional groups build out their systems, and so that's a big part of why we're here today. Is we're trying to bring that capability to everybody in our space.
Great, awesome. So, how did you get into like real estate space and then asset management space?
Grew up wanting to do real estate. My father has been involved in the industry for as long as I can remember. So family trips when I was 8 or 9, I remember swinging through Denver actually, on our way out to go skiing. I remember stopping off and checking out some sites, and that was always kind of a part of me and my brothers experiences with their father. And now we all are in real estate, kind of following in his footsteps, and we're working with him and his peers, the people that we grew up respecting a lot in our community. So we've all, I think my entire family, just kind of real estate family, always wanted to be involved. Asset management in particular, I was working with PGIM doing real estate debt. Knew that I wanted to kind of be on the other side of the transaction, more on the ownership side. Took a role out here in Denver when I first moved here 5 years ago. Took a role with that mid-sized private equity firm. We rolled out a lot of great reporting things there on the asset management side. Meanwhile, we were looking at acquisitions on a daily, weekly basis. So just got some great exposure right out of the gates. They were growing and growing pretty quick at the time. So we were a team of 3 analysts at that point in time. We were covering all of their deals. So systems became absolutely essential to be able to manage at that scale with such a small team. So built out a lot of systems. That's where I just really dove into and learned Excel, because just had to wear a lot of hats. And yeah, about a year later, started my own firm. I've been doing acquisitions and underwriting for a different group, doing some asset management in general over the last 2 years, but really started focusing in on this platform that we're building right now in the last couple of months here.
Awesome, great, thank you. So, what makes you start, your own asset management company?
Seeing the space, I know a lot of syndicators out there who they're great at getting a deal closed, but no one's really ever showed them or told them, like, what do you do afterwards? What does that look like moving forward? I mean, everybody I know in the space has a acquisition model. There's all this, discussion about, ooh, like, whose acquisition model do you use? But I mean, the real question is, like, I mean, whose asset management model are you using? Like, where are you keeping track of how your deal's doing? Because realistically, we're not in the environment we were before from 2014 through 2022, where cap rates are going to come down and bail you out if you are not staying on top of your project. So we wanted to build something that would empower our friends in the space that own and operate their own deals. We wanted to build something that would empower them to keep track of everything going on with these deals, because one, it's the right thing to do, and two, having that level of insight is typically something that either takes an extraordinary amount of time or is just something that's only accessible at the institutional level with some of the options that they have that cost 50 to 100,000 a month. We wanted to change that. We wanted to bring a tool to the market for everyone that would be accessible from a price standpoint, but also to provide that institutional level of accountability to operators and to property managers.
Thank you very much for doing that. So, share me some, key features of your product. How exactly, operators or apartment syndicators can benefit from it, or any other operators like any other asset classes can also use this tool.
Yeah, so we have not built it out for any other asset classes. You can do a lot of things in a mediocre way, or you can do one thing really well. We're trying to focus on let's do one thing really well. Let's get our name out there in that space. And then, we can start talking about how this tool could be used for other groups, specifically self-storage. We think self-storage would probably be the first natural other space to move into. But as far as the current program goes, we're only really doing multifamily. And I'd say some key features to the product is going to be how we're able to dissect the rent roll on a ongoing monthly basis. It's probably the densest and worst formatted financial document. We've all seen them. We all know how tragic it can be when a broker sends you on an acquisition like a PDF of a rent roll and you got to convert it, or find someone like me who knows how to convert it, get that worked into your model, or you're just hard coding data points into that model. That was kind of the first thing that we went after and attacked. We wanted to make sure that we could consistently get rent rolls into the format that we needed them. And then we had to figure out how to, from the format we could get them into the model and database the information in. Needed to figure out honestly, I've been building Excel formulas for 8-10 years now, something like that. And I had to go to square one with some of the approaches we had to take to algorithmically extract data points from these things. But I've been incredibly happy with the results of what we're able to now do and the insights we're able to derive from rent rolls. I've worked with groups that have some very expensive products on an asset management level, and I'm pretty confident, very confident, in fact, that what I've built is stronger than those products. Some of my favorite KPIs that we're doing right now, I really like our lease roll statistics. We can break unit inputs out by unit type and then subclassify them by renovation level. So let's say we've got 40 A1 units on site at a property, 10 of them are renovated. We can take out of those 30 classics. We can look at the trailing six and look at what's been happening with the classic rents. We've been looking at what's been happening with renewal rates. We can also look at the retention ratio on those renewal rates versus and then how that compares to the market rent expectations. We can also compare that to what the renovated rent looks like on those units. We know how long units, like what kind of downtime to expect for those renovations and what they cost. So we can, really quickly back into, all right, in the coming 3 months, we've got 8 of these 40 units are expiring on their leases. 6 of those are classic. We can pretty clearly play out how those 3 months are going to go and what approach should be taken to maximize your NOI, whether or not some of those units should be renovated, whether or not some of those units, if we should push rents a little bit higher on some of the renewals, accept a slightly lower than average retention ratio, but above industry average, you name it, the sky's the limit. We can derive those insights from these data points though now, which is just, excellent in my opinion.
Can we use this tool for marketing space and also renovations or constructions side also?
Absolutely. All of our outputs, we're pretty flexible with our clients. Like if they need a specific output, or, they want to talk through some new thoughts on some KPIs they want to look into. I mean, that's one of my favorite things in the world is when someone comes to me with some new ideas. I love it. I love a problem. I love getting to solve a problem, something complex, especially. One of our clients brings us a new set of problems to like, hey, can we track this? I'm like, well, let's find out. And I just absolutely love diving in and figuring out, okay, like here's the document we're going to need. Here's how we need to configure it. And then here are the formulas to track that. Here's the new report. And then as far as marketing concessions goes, I guess if your question more specifically, are you talking like how to plan out marketing budgets and concession budgets?
Yeah, kind of. Yeah.
Okay. I may have gone on a slight tangent there, just get a little excited about this stuff from time to time. Yeah, so absolutely. We're keeping track of all of your economic vacancy factors. We're keeping track of what the net results of those items are in terms of, just their impact on the NOI. And then, yeah, if we're seeing like a lag, like we have a property where we were seeing a lag on the large 1 bedroom, 1 bath rents, and we knew that we had 14 of them expiring in 2 months. So we went ahead and proactively got in touch with the property managers. We're like, look, the property is 98% occupied. This unit type in specific, it's 80% occupied. Why is that? When we're going on these tours, like just start sending us notes when someone tours this unit. What happened on that tour? Like, why are they not leasing this unit? Come to find out that our rent was just, $25 too high. So we dropped our rents, put a couple loss leaders out there, some of the classic ones. got them filled up. But when you're just looking at the combined occupancy, you see like 96, 97%, like, okay, yeah, everything's fine. But the bottom line is we were leaving money on the table, and my tool found that and, led us to the conclusion of what we needed to do to increase our NOI and grow what we were able to distribute that year.
Can we also track renovations, unit level
Yep.
and cost and all the expenses kind of stuff?
So cost is going to be, it's a slightly separate discussion. Really hard to clearly take that off of the T12 because property managers, like those numbers are moving around a lot. So we do need some additional reporting from our owners to be able to keep track of that. But yeah, I mean, your ROI on improvements is exceptionally important. Whether or not you're spending money in the right places matters, especially now where you're borrowing that money at 8.5%. I cannot express how important it is to know what you're spending and what you're getting out of it. So yeah, we keep track of on a monthly basis if the unit's been renovated or not. We have kind of fairly automated ways of doing that. We may have to work with the property manager to have them set up their rent roll in a more market standard way if they aren't already, but we haven't had that issue too many times to date. But yeah, as I was saying though, we can keep track of what's been spent on CapEx and what the net results have been, and which units are making the best targets.
Thank you. Can we also use this tool for due diligence during pre-acquisition side?
We are probably going to roll out call it like an onboarding service, DD service, where we go in and we help like audit all of the financials, audit your acquisition model, your business plan, make sure that everything checks out. We can be there, through that closing process and, help in supporting a team get through that. Certainly, like if you own a deal and you're buying another deal down the road from it, I mean, you're going to love the insights that you can get from our tool and what it's going to be able to do for you in underwriting your next deal in that market. I'm not joking when I say that we keep track of just about everything we could possibly think to keep track of for these deals. So, it turns into a absolutely wonderful repository of data to look back for any new pursuits in the general area.
Got it. Thank you. Can we integrate this tool with property management softwares like RD or other tools?
Yeah, we already are working with Yardi, Resman, Appfolio, just to name a few. Having underwritten, or must have underwritten like $4 or $5 billion in transaction volume while I was at Prudential from the debt side of things, then acquisition on my own right on behalf of my clients. At this point, I don't even know. I've probably input around 4,000 rent rolls though in my tenure at this point, if not 10. I don't know. It'd be really hard to say. But the bottom line there is I've seen every type of report that can be generated across the country by any operator. I've seen them all. I know what they look like. So I built our inputs as common language as possible, similar to how I build my acquisition models realistically, where I just know that I can get to what I need from the data from no matter who sends it. So yeah, we built it as common language and malleable as possible.
Got it. Who are the ideal customers who can use this tool?
We wanted to target, syndicators over 100 unit per deal, looking to grow, but, understand how important asset management is and just know that it's also excruciatingly time consuming to do it right. We want to be a true partner to our clients. We want to be there and be helping at any given point. So looking for someone who understands, that this is something that they need to be doing. Their investors are going to absolutely love the reports that we're able to generate for them. They're going to love the accountability and insights into how their investment, which for, these syndicators, I mean, they're investors. These are people who this could be their kid's college fund, like this stuff matters a lot. And we've had an incredible response from the investors of groups that we're working with of just absolutely loving getting to see what they're seeing from us on a monthly basis. But yeah, so I mean, I would say, sub 2,000 units typically. Once you hit over 1,500, 2,000 units in a portfolio, it becomes a slightly separate discussion. We would look at more of like an enterprise structure or software as a service structure, wherein we are providing training and the tool itself to the client, and they're working in it with one of their own employees, because the pricing starts to, the way we're trying to price ourselves is to be cheaper than bringing on an employee. And at that size, we start to kind of hit a wall with, are we cheaper than an employee or not? Or it doesn't make sense for these guys to have their own employee and, pay us, less and they do the work themselves, but we provide the tool. We're happy to talk with anybody. We want to work with everybody. We have some tools for sale for, small operators that have a couple 16, 24 unit deals, because we also think that this is important for those guys as well. So we have, self-service one-off tools for that we've been developing as well, just so that we want to be able to work with everyone across the space.
So would you share any best experiences so far implementing, Ember Asset Management tool?
Yeah, I mean, developing it has just been so much fun. I'd say like top three. One of them was getting to call out a pretty crummy property manager that was just kind of phoning it in. Got to call them out real hard on some accountability items, because they, before no one was keeping track of it. Now, we were, and we had a benchmark to say like, look, like it's just not getting done, and here's how badly you're not getting it done. So that was pretty fun. Not that I like, shaming people or getting people in trouble, but accountability is good in general. Another top three would be, the response that we've gotten from limited partners in the deals that we're reporting on right now. I have absolutely, just placed a lot of value in the reactions that we've gotten there, because they love the product. They love what they're able to see about the deal. Because again, it might be a $50,000 check, but it might be the only one that they're able to write. And it might mean the world to them to know what's going on with that investment, because it truly is, they're all accredited investors and everything, but it means a lot more to some people than you might realize. And then final, yeah, just best experience, just building this thing out. I love math. I love problem sets. I love, problems with solutions. Like I never really liked English class where you write a paper and depending on how your English teacher felt about you, that was your grade. Math was always cold, hard data. You either got to the right answer the right way, or you got there the wrong way, or you didn't get there at all. So I've always loved math, and I love what we're able to do with it for our clients here.
Yeah, got it. Cool. And any challenging experience in implementing or developing this tool?
Honestly, all of it was hard. I had the model up and was able to, again, I'm just on my phone today here because I'm having some laptop troubles. I've got some formulas that I had never even in a million years thought I would be able to figure out how to build them. Things that are, dynamically resizing the data sets that they're drawing on based off of prompts from, all across the model that are derived from, other prompts. Just some incredibly complex things that I just love. Like as soon as you get it working and you hit that, but it's been the entire thing, other than maybe our input for the leasing tracking. We're pulling down the leasing summary for the month, and we input 5 numbers off of there, and then we graph those 5 numbers and we look at a trend over, certain periods. That's the simplest one we have in there. Still satisfying, still great to see the data, but everything else, the way that we're synthesizing data from multiple points in time and different sources, it's all been a challenge. But we're here today and very confident in where we've gotten it to.
So how do you see your company or your product next 2 to 5 years? Where do you see?
Yeah, I mean, honestly, we want to help everyone who needs help right now. That's our first and foremost goal, is to get ourselves out there, find the people who are struggling in this market, and bring this tool to them as, a step in the right direction to get their asset where it needs to be. Because again, we're not in a we are not in a cap compression environment. We are in a cost inflation environment. We are in a cap expansion market. That has not cost this much in, I think, since 2000. I forget which year it was. It's been a long time since we've seen debt where we have debt today. That's making it extremely challenging, especially when you were buying deals at low 4 caps, high 3 caps in these markets that, yeah, everything looked great, but the things have changed, and we've got some things that we need to sort out now. And the accountability needs to be there to be able to get those deals across the finish line. Whether or not it may be on time, that remains to be seen. But you gotta keep these things alive, and you gotta know what's going on with them so you can address the problems as they come up. So yeah, next 2 to 5 years, we just want to get out there. We want to help as many people through this time as we can. Long term, we want to build a investment platform into this company, something where we can co-invest with the sponsors that we work with and like and trust, something where we can raise funds into just a pool that we're able to deploy into deals and have that, knowing that we have that oversight in the deal of what's going on, and we've seen this guy operate, and we love how he operates. But we think that would be a pretty powerful place to be investing from.
And good luck with that. Let's switch towards personal side. Any personal habits that are helping you to be successful?
I do a lot of rock climbing in my free time. That was a big part of why I wanted to move to Colorado. I guess I rock climb in the summer and ski throughout the winter. A lot of backcountry skiing, a lot of hiking. I spend a lot of time just kind of dangling from a wall, where it is truly like, you versus nature. Nature, while it might be an inanimate rock, these mountains are, in their own sense, alive. They are environments. The weather can shift. You just got to be on your toes, and you have to be receptive to what your senses are kind of communicating to you about the level of danger that day. That's why, when we go backcountry skiing, we're looking at the avalanche forecast. We're going out, we're digging pits, we're testing the snow, we're testing the mountain and getting data from it. So, my whole life is collecting data points and connecting them. When I finish a rock climb that I've been projecting for, a season, it's normally because what I was able to do was I was able to memorize the sequence of how my hands and feet were moving for 200 feet of vertical space and choreograph that and know exactly how my hand needs to be, how my hand needs to land on the hold, where it needs to land on the hold, and which direction I'm pulling off of it, where my feet go next, and then where my hand goes. So coordination, effort, and then just a lot of time challenging myself, constantly to do better. So that's why I love those hobbies. That's, I've always had a great time playing sports in general, but I've really recently loved these kind of me versus me sports.
So any personal learning that has played, major role or massive impact on your, whole life?
I read a lot of just boring real estate books. Some of them are great. Obviously there's wonderful writers in the space, but you hit some of them and it is just a textbook, and it's like I'm back in a college classroom, which I enjoyed it in different ways. But my favorite way of learning is to just be out there and doing what I'm trying to do. So the exposure with clients I've gotten to work with, the questions that they ask, that's how I'm learning and growing most days. And that's why I love real estate too, because you really just never know what's going to come your way. I wake up, I've worked with about 42, 45 clients now. I never know who's going to reach out, what they're going to need, and when they're going to need it by. And I love that. I love being on my toes.
And any books that impacted your life?
Thinking on it, Barbarians at the Gate, Other People's Money, and The End of the World is Just the Beginning. Those are 3 books I've read over the last, 10 years. I think I read Barbarians at the Gate in 2015. Absolutely just loved that book. Just complex deal making, a lot of great characters, more about the emergence of the leveraged buyout in like the 80s, 70s, 80s, like RJR Nabisco, and the story behind that deal getting bought out. Very, very compelling though. Kind of, it's the underpinning reason behind like what we consider value add in the multifamily space though. So I really liked that. It's a lot of very interesting characters that the author does a wonderful job of, building in your head. Oh, and then Power Broker is a wonderful book. 1,100 something pages, took me all year to get through. I bought a reading chair specifically to like help myself remember that I need to chip away at it. I needed a safe place to go and tackle 20 pages at a time, because it's so dense. It's an awesome book. If anyone ever gets the chance to get through that thing, absolutely loved it.
Yeah, thank you. And how can listeners can connect with you, Carlson?
Yeah, go to ember-am.com, book time with me. I'm almost always available. I like to be as flexible as I can. Try to not put anything before 8 a.m. for me. I'm not a terrific morning person. Otherwise, I can be reached to email Colson at ember-am.com anytime. Just reach out. Love to talk. Even if you don't want anything from me, just like to connect with people. So, reach out. Let's have a conversation.
Awesome. And thank you very much, Carlson. Thank you for sharing about Ember Asset Management and also KPIs and how exactly investors can benefit utilizing this tool. Thank you very much.
Yeah, absolutely. Thanks for your time, Rama.
Yeah, thank you.